Banking stocks have tumbled on Monday as initial relief about the rescue of Credit Suisse has given way to new worries about big banks' debt. UBS shares are down 12% as it agreed to buy troubled rival Credit Suisse, which has seen its shares nosedive 62%. UBS is paying $3.2 billion to buy the bank in a state-brokered deal. The government says the deal is the best solution to restore confidence in the sector.
The bankruptcy of a global systematically important bank would have caused irreparable economic turmoil in Switzerland and throughout the world. For this reason, Switzerland had to take the responsibilities beyond its own borders. These efforts have paid off. The Federal Council is convinced that UBS takeover of Credit Suisse has laid the foundations for greater stability both in Switzerland and internationally.
We're going to cross to Niamh Barker now, who's live for us in London. We're in the first few hours after this deal was announced. Niamh, what's the reaction been so far?
Well, Rob, you can almost hear the collective sigh of relief here in the city of London. There is a real feeling that a major financial catastrophe has potentially been averted. We've heard from the Bank of England saying that they have had their confidence restored, that things are strong and working very well there. Similar kind of words from the US Treasury and the European Central Bank as well. Who would have thought it? You know, two massive banking behemoths now becoming one, a company that will, whatever it ends up being called, will be worth something like $1.6 trillion going forward. You reported there, of course, about the fall in share prices. There isn't, I believe, that much concern about that, despite the fact that Credit Suisse has seen those share prices fall something like 62%, its biggest fall ever. The belief is that simply the market's driving the prices down to what UBS believes that they're worth. The question is whether they continue to fall or remain low while this takeover starts to bed in. A similar kind of thing for UBS as well. They were down, as you said, about 12%. The hope is that will stabilise. There is, however, a big question about what happens to the people that work at Credit Suisse and UBS. 5,000 workers at Credit Suisse, 6,200 at UBS behind me. We know that UBS wants to streamline its activities going forward. It wants to make what was left over of Credit Suisse a little bit less risk, more risk-averse, rather. And whether that means cutting back jobs, well, there's still very much a big question mark over that. But across the board, the feeling is that this has averted major instability in financial hearts like London and other centres across Europe as well.
Niamh, thank you very much indeed. That's Niamh Barker talking to us from London. Well, Credit Suisse isn't just one of Switzerland's largest banks. It's also classified as a globally systemically important bank by the Financial Stability Board. It manages around $1.3 trillion around the world. Its profits dropped significantly in 2022, falling nearly $8 billion after losing $2 billion in 2021. Its shares have been in sharp decline since 2021. They've now lost more than 95% of their value in the past 5 years. Investors took their money elsewhere last week when the bank's main shareholder refused to offer financial help. After that, even a $54 billion lifeline from Switzerland's central bank couldn't stem that pessimism. And that has left the buyout solution. Once UBS acquires Credit Suisse, it's going to have access to more than $5 trillion in assets. Well, Karen Alexander is Chair for International Commerce and Financial Law at the University of Zurich. He's joining us now live from there. Sir, thank you very much indeed for being with us. I want to ask you first of all about the share movements that we've seen. As Niamh was suggesting there, there is possibility this is just a market readjustment, but how much of it is down to a readjustment and how much of it is down to genuine concern about the possible ramifications of this?
Well, I think more of it has to do with the concern for the ramifications of this forced bailout that has taken place over the weekend. It was crisis management done over a short period of time. It's created much investor uncertainty. Shareholder rights in UBS have been suspended. They weren't given the right to approve the deal or not. Also, the treatment of bondholders has been disregarded. The FINMA, the regulator in Switzerland, has imposed 16 billion francs in losses on bondholders. So this has created uncertainty and volatility in the bank bond market this morning. So I'm afraid that this is not just a blip. This market uncertainty it's going to probably get worse.
So a lot of financial institutions around the world are anxious to kind of tamp down any pessimism, to say that the problem has been solved. But looking at this deal, what's your interpretation of who loses out the most from this?
Well, Switzerland as a country has suffered a damaging blow to its reputation for prudence, stability, and fiscal management. Also, this failure, you might say, of Credit Suisse having to be taken over by UBS is another example where not only weak corporate governance at Credit Suisse caused the problem, but also there was weak regulation by the Swiss regulatory authorities, which made the situation worse. And now it has created a crisis that we all now hope can be contained in the future.
The bank does have a history of problems. I'm just reading here, back in 2014, it pleaded guilty to allowing US clients to evade taxes. Back in 2020, its chief executive resigned because of a corporate espionage scandals. There's been a storm of negative publicity generally. Just because UBS has bought Credit Suisse doesn't not necessarily mean that the problems at Credit Suisse have been solved, does it?
No, it doesn't. Poor risk management and weak governance practices have been endemic at Credit Suisse over the last 8-9 years. And even as late as December 2022, the chairman of Credit Suisse's board told the market that the outflows that Credit Suisse had been experiencing, the outflows of money from the bank had been reversed, and that they were getting inflows, when in fact it was completely false what he said. It was a false statement. And so I think investors have a right to be concerned, and that's why there's continued market volatility going on.
Really interesting to get your thoughts on this. Karen Alexander, we appreciate you being with us on Al Jazeera. Thank you very much indeed.
Thank you.